All right, so good morning once again to you all, ladies and gentlemen. Yesterday we started with an interesting session, that is technical indicators, and we did the introductory part of technical indicators. We looked at what we mean by technical indicators, and we said they follow mathematical models. We also talk about the types of technical indicators or the purpose of technical indicators, so 8 categories. We talk about the fact that indicators may be categorized based on their use or purpose. And also, we also discuss about the fact that some indicators may have double purpose. Maybe it may be a trend line indicator at the same time to a momentum oscillator, right? So we discussed about all these things yesterday, and today we agreed we will all be present today, and we agreed we will all be present today, and then also start and take each of the indicators, at least if possible 4 or 5 of them, for us to discuss about them. And afterwards we would also look at how we can combine different indicators to be making confirmations and then also entries. So let me share my screen as we start. Straightforward. This one I'm just going straight away, and we are not branching anywhere. So I believe you can all hear me loud and clear. Please, you can share the link, inform those on the platform that it's time. Okay, both on the signal group and then also on the distance. I've been offline yesterday because I've seen a lot of messages and I have to take time to read them. That's the reason I don't want to open the chat. So I'll take time to read all those messages before I'll just go there myself. All right. Let me see if you guys are doing that. Okay. All right. Let's go. Those who join will join. Are we good to go? Are we start? I guess you cannot hear me loud and clear. Am I loud and clear on the line? Hold on, let me make few people a co-host so that in case I'm out. Okay. Coach Mo is here. So Okay, my little bit I'm twisted, so please guide me in case I'm out. You kindly prompt me. All right. Okay, let's go. All right. So just as we were saying yesterday, that is what we started, and today we are looking at what you called moving averages. Moving averages, and I'm going to take time to explain this, and then also escape few things because I want us to escape or dodge the mathematics involved so that a lot of people can understand in brief what we want to communicate this morning. Now, when we talk of moving averages, basically the idea of moving averages, it follows as we said yesterday, it's a trend following indicator, right? That's helps smoothing the price data. So with what we discussed yesterday, we all agreed or we stated that moving average is a trend line or trend following indicator, right? And the main purpose of, let me use the board. The main purpose of a moving average is to help smoothing the price, right, of a data or of a market. So whenever we are using moving averages are lines that helps traders to be able to identify market trends. Okay, so we use moving averages to identify trend. Unlike other indicators which may help you to identify the momentum, the main purpose of a moving average is for you to know the exact trend of the market, either it is uptrend, downtrend, or sideways. These are the three trends, and using moving averages you may be able to identify these three key trends in the market. So you don't need to specialize in all other aspects, but getting how moving averages works, a trader may be able to understand the concept of what of moving or of the market, may be able to identify various market what trend, right? So that is the main purpose of what of a moving average. So it's the lines, the moving averages are lines, okay? They are lines that helps traders to be able to identify the trends, and we shall look at it. Now, when it comes to moving averages, we have different types of moving averages like the simple moving average. So the simple moving average, that is SMA. In case sometimes you may see this SMA, okay? That is simple moving averages or moving average. And we also have simple weighted moving average, that is SWMA. So simple weighted moving average. And then we have the last one, which is exponential moving average. Exponential moving averages, moving average. Okay, so these are the three basics or the three main forms of what of moving averages. In fact, there are many, but these are the three main basics that at least we are only going to focus on simple moving averages, and then if time permits, maybe we discuss something more about exponential moving average. But our focus is on simple moving average or moving averages, which is the simple moving averages. Okay, now basically when we talk of the simple moving averages, um Let's see. I just want to speed up, and then also ensure it becomes so simple without complicating things here, so that you can be able to understand this session, right? So basically, when we talk of simple moving averages, just as the name itself derives, it's help traders to be able to have the plain average, right, of prices over a period of time. So the main work of a simple moving average is to help traders identify the exact or plain averages, average of what, of a price over a period of time. And the reason why we call it average is this. Now, for instance, you may see what we call 10 days moving average, 10 days or 10-day moving, 10-day simple moving average. So 10-day SMA. Now, when we talk of 10-day simple moving averages, it's about how prices, okay, closes. So basically, every candle that we see on the chart, I've explained this in our previous session, one of our previous sessions. So every candlestick has got three things. You have opening, close, high, and then also low, right? Opening, close, high, and then low. So every candlestick it closes, there is high, and then also there is what, there is low, right? So each candlestick that you see, you may see these four things: the opening of a candlestick, the closing of what, of a candlestick, then also the high, and then also the low of what, of a price or of a candle. So when we talk of 10-day moving averages, so how prices, how the last 10 prices closes, right? That is what we term it as the 10-day what, 10 days moving averages. So if looking at let's say about 10 different candles or 10 different prices, okay, so let's say 1 2 3 4 5 6 7, let's assume, okay, let's assume it's 7 days MA, or 10, anyhow we say it. So when we talk of simple moving averages, we said it's identify how the plain averages of what, of price over a period of time. So how all these 10 different candles closes within the past what, days, or using the past periods, which is the 7 different candles were able to close. So in mathematics, how they able to derive, or how it's being able to derive this simple strategy is this. So looking at the simple moving average, looking at the simple moving averages, it's being add up of the different prices. So for instance, we have the first price, which is being closed, the second price, the third price. So all the 7 prices, okay, over their average, which is 7. So let's assume we are trading BTC. BTC first, the first closing price was maybe 108K. Okay, the second closing price was 109K. The third closing price was 100K. Okay, the fourth closing price was, let's say, 111. The fifth closing price was, let's assume, 112. So when we add all this, if we want to get the um the moving average of the next price, that is an assumed price, which can be used for the next price, we would add all the 5, 1 2 3 4 5, divided by what, 5. That will give us the value that we will get, may be the expected next closing price of the asset. I don't know if you get it. I may escape this very fast. I just don't want to use it to complicate things or confuse you. I know most of you are already furious of mathematics. So the idea of simple moving averages or moving averages is about how the previous days, or how the previous candles or previous prices close over a period of time. So if it is, when we say 50 days, I'm just trying to explain what we mean by 50 or 50 or 10 simple moving averages. So when we say 10 moving averages or 5 moving averages or 1 moving average, we mean how the previous price closes, right, over a period of time. So if it's 20 moving average, that is how the previous 20 prices close over a period of time. So if it's 20, the various prices all divided by what their average price, which is 20. I don't know if you get it. Are you with me? Do you get what we are discussing? I'm just trying to explain what you mean by 10 moving average, 20 moving average, or 5 moving average to you. Do you get it? Do you get it? Do you get it? Hope I have not succeeded in confusing someone here. Hope I have not succeeded in confusing someone here. Do you get it? Do you get it? Okay. Now, I just want you to have a fair knowledge about what we mean by a moving average. Basically, when we say a 10, because that is what we are going to use in all our languages this morning. Okay. So when we say a 10 days moving average, or 50-day moving average, or 20-day moving averages. Very good. Okay. Now, when we say 5-day moving average, you said put in writing, please. Okay. Let's go. Let's use the board 10. Oh, where am I? Okay. Good. So basically, when we say a 10-day moving average, 50 days moving average, this is what we mean. Mm, Okay. So because this is what you are going to use in all our lessons in using moving averages. So I just want you to have a fair knowledge about it when we talk of a 10-day moving average, 5 days. So basically, we are going to see what we call 10-day MA, that is a moving average. Okay, 50 days moving average, 20 days moving average, 100 moving average, and so on and so forth. 5 moving averages. So what we are saying is that basically when we talk of a moving average, so either a 10-day moving average, 50 days moving average, we mean how the price closes within the past 10 candles or the past 10 prices. So for instance, on a chart, we know when you talk of a price, we mean the candles. So we may have 10 candles on the chart. Okay, let's assume this is a bullish trend. We may have 10 or 5, anyhow you can draw it so that it will suit what you are communicating. So 1, 2, 3, 4, 5, 6. So let's assume these are the prices. Okay, so the last price closes at the price of, let's say this is BTC. The last candle closes at the price of, let's say, 120. The last one closes at the price of, let's say, 121, 122, 123, 124, 125. So if we want to get the next result, it is assumed based on this mathematical principle of a moving average. We just tally, okay, the total price of the previous of the 6 moving averages. So 1, 2, 3, 4, 5, 6, which is 120 plus 121 plus 122 plus 123 plus 124 all over the total average. What's the average? It is 6. So divided by what? 6. So adding up all this divided by 6 may be our next anticipated what result of the closing price. That is all what we are trying to mean. So this is just something for you to catch up with the explanation of what we mean by 10, 50, 20 moving average. And that is the reason yesterday I told you that most indicators follow what we call mathematical models or mathematical calculations. But then in our lessons, we may try to escape all these calculations so that we wouldn't succeed in confusing people here. So that we wouldn't succeed in what? In confusing people here. So basically, on a chart, the moving averages are represented by lines. Okay, on a chart, the moving averages are represented by what? By lines, to which you may see all these lines both in our exchanges, TradingView, and then also RoyalQ. Let me know if you understand. Those of you who couldn't get it, do you get it now? Those of you who are not getting it, do you get it now? Let me know. Do you get it now? Do you get it now? Let me know. Do you get it now? Do you get it now? Do you get it? Very good. All right. Good. Then we can proceed. So basically, moving averages, okay, is used to show the trend of a market. That is the trend direction of what of a market, and then also with the help of moving average crossovers, may be able to interpret different market trends and then also find um making market decisions based on what entries. So that is what we are going to do quickly. So first, when we talk of the trend of a market, basically first let's see some of the moving average where we can identify them both on TradingView and then also in our exchange like RoyalQ. So let's see. Okay, so what we are saying is that moving averages can be used to show or identify trend direction. mm, trend direction, and then also um price crossovers. Price crossovers. mm, Good. So when we understand moving average, and then the last part of it, though we may not focus much on that, is moving averages is also used to identify key support and resistance areas. So these are the three basic major things that we can study or understand from the moving average. So we are going to only talk about the trend direction and then also the crossovers, right? Okay. So first, let's see where we can observe moving averages both in our exchanges and then also in okay. So over here on Binance, right? You may have this here. So for instance, if you want to see a moving average, let's click on any of these assets. So let's tap on Solana. Very good. Now when you come here below, you can see below you are going to see indicators. Just as yesterday we talked about them. These are masses of them. So different forms of what indicators here. So you can choose to click on this right corner here, or whatever indicator you want to use, you can click on it to turn it on. Whatever indicator you want to use. So over here we are talking about moving what averages, right? So we either if you want to turn it off, we turn it off, then or we click on it. So let me turn everything off here. Okay, so we have let's use moving averages. Good. So over here you can see we have, after clicking on the moving average, you realize that, let me turn it off. You see everything is empty now. So after clicking on it, where is it? You can see there appear three lines here, right? Now you can set up these three lines by identifying the various moving averages and how you want to use them. The various moving averages and how you want to use them. So what we are saying is that when it comes to moving averages, so moving average using the lines, right? When the line is having a sloping up, or when the line is sloping up. So for instance, let's use the line. Let me explain that. Let's click on it. Okay. So let's click on indicator settings. Indicator settings, right? So very good. Moving averages. Good. Now when you come here, you realize that you are seeing 10 moving average, 25 moving average, 55 moving average, 99 what moving average. And of course, you can edit it and change it to any number that you want to use. So maybe 200 moving average. That is fine. So let's assume you want to use only one line. Okay, let's turn everything off. Let's turn everything off. So we are going to use 200 moving averages. So click on confirm. All right, let's go there. Good. So you can see this is the moving average, right? This is the what? The moving average. So what we are saying, for example, what we said, so it's showing the last price, that is 199. So over here, the 200 moving average that we can observe here, this is it. Now what is it saying? So what we are saying is that moving averages identify or help us identify trend. So if it happens that the moving average is sloping up, it indicates that the price is what is uptrend. And then when it happens that the moving average is sloping down, it indicates that the price is what is downtrend. So when you look at this particular moving average, either it's sloping up or it's sloping down. That is what is going to tell you to know that okay, either the price is uptrend or downtrend. So if a trader wants to identify the trend based on his understanding about um the moving averages, he may be able to know either the price is going up or coming down. And basically when you observe this, you could clearly see that the line, the moving average, is what is slightly sloping down, right? Okay, now I may explain what do you mean by the 25 moving average. Even though we've done the calculation, I'll go deeply and then explain something briefly about the different forms of moving averages. So aside this, we also have we said we can also use moving averages to consider price or price crossovers. So for instance, not do we only use one moving average, we can use two or three. So we can choose to turn on this, right? Good. So at least we have three different moving averages or three moving averages. So we click on what confirm. Let's go back. Good. Now, having this in mind, you could realize that what we are saying is price crossovers. So we can also use the different moving averages, especially with their crossovers. And basically, we have three different moving averages here. We have the 25 moving average, 55 moving average, and then also the 200 days what moving averages. Now when we talk of 25 moving average, what do we mean by 25 moving averages? A short term what moving average. So the 25 moving average gives us the short term moving what average, and then the 55 gives us the mid term, the mid term moving what average, and then the 200 moving average gives us the long term price movement or the long term moving average. So the 25 moving average identify or indicates the short term price movement, and then the 55 moving average indicates the mid term price movement, and then also the 200 moving average identify the long term price movement. So over here, when we talk of the moving average crossovers, it is simple. If we want to identify uptrend or downtrend, let me know. Am I going too fast? 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 Okay. Okay. Oh, someone said I'm going too fast. Okay. So Israel, I'll take time. All right. Okay. That's fine. Okay. All right. Let's proceed. Let's proceed. So over here, they're talking about price crossovers, right? So we have the short-term moving average, the long-term moving average, and then also the mid-term moving average. Now, looking at all these moving averages, we are talking about the moving average crossovers. So this happens to be our short-term moving average, and then this line happens to be our mid-term moving average. So basically, if we are using two moving averages, we can choose to ignore the long-term moving average. So this one happens to be our short-term and our mid-term moving averages. And when we talk of the short-term and the mid-term, that is, it's identifying how the price is moving within a period of time, right? And then how price is moving within a mid period of what time. Okay. So looking at these two with the moving average crossovers, right? With the moving average what crossovers, what it interprets or explains for traders to understand this concept to use is very simple. When the short-term moving average, when the short-term moving average, okay, when the short-term moving average crosses above the long-term moving average. So when the short-term crosses above the long-term, it gives a trader an indication that the price is what is bullish. We've started, so pay attention. So basically, the idea of indicators, aside this mathematics, or aside the mathematics involved, they are just principles. Do you get it? They are just what? Principles. And when we talk of principles, like we said yesterday, they are things that have been stated by individuals or in analysts, experienced analysts over years, and they've drawn down the curtains or conclusion that based on what based on my experiments, my observation, this and this and this are the conclusion of this, right? So in simple explanation, when we talk of the moving average crossovers, it's about how prices, when we talk of the prices, these are what we call prices, the candles are what we mean by prices. Okay, so it's about how prices crosses beyond, above and below, right? So over here, when the short-term moving average, okay, crosses above, so when it crosses above the long term, it indicates as what? As bullish. And then when it crosses below, it indicates as what? As bearish trend, right? That is the idea. So if I am trading using a moving average and I see that there's a short term, then there's the mid term or the long term moving average, considering the two, now I could clearly see that the short term moving average is below the long term moving average. Rightly, I can say the price is what? Is downtrend. Hmm. Do you get it? Do you get it? Do you get it? Let me know if you get it. Let me know. Do you get it? Let me know. Do you get it? Very good. So let me see. All right. Okay. Is someone saying no? Christopher? Okay, now what we are saying is what we are saying is this. We have moving averages. Okay, so we've added two more lines, and we are saying that these moving averages that we have here, we can describe the 25 moving average as a short term, and then the 55 as a long term, or the mid-term moving average, right? Good. Now, looking at these two moving averages, what we are saying is we are talking about the price crossovers, okay? The crossovers. And what we are saying is if it happens that the short term, which is this moving average, which is indicated by color green, this is the line green, right? Crosses above the line, which color is this? Is it purple? Is it purple or violet? Please, me, I'm colorblind, so don't mind me. So over here, when the short-term moving average crosses above the long-term moving average, it's indicated as bullish. And in the same manner too, when the short-term moving average crosses below, when it's below it, it indicates as what? As bearish. That is all what we are saying. So whenever we are trading using the moving averages, we have the short-term moving average, the mid-term moving average, then this happens to be the long-term. But in crossover, we only need two, and that is when we focus on the short and then the mid as our major moving averages, right? So over here, what we are saying is simple. What we are saying is that the moving average crossovers helps traders to be able to understand price trend or market trend, the trend of the market or of the asset. So over here, that is what we term it as the golden cross, and then also the death cross, the golden cross, and then the death cross, right? So let's look at how to trade using these moving averages. How to trade using moving averages. Let's look at it. Please, do you get it? Are you getting the concept? I just want to simplify things here. I don't want to complicate anything. Do you get it? Let me see if let to zoom to see if my audience are grabbing the concept. Are you grabbing the concept? Are you grabbing the concept? Repeat, repeat, repeat. Are you grabbing the concept? Are you grabbing it? I have not started the golden cross yet. I have not started the golden cross. Okay, okay, all right. Okay, let's proceed. Let's proceed. Matters of concern are important because I'm teaching you, I'm not teaching myself. That's the reason why I have to ensure you are grabbing the concept before I move on or proceed. Okay, so in simple understanding, now we are talking about the moving average crossovers. Okay, talking about the moving average crossovers. What we are saying is this: we have this is our moving average. Wipe all this rubbish here. This is our moving average. This is it, and it has been indicated by 25. We have 25 moving average, MA. We have 55 days moving average, then also 200 MA. Okay, now we've already explained what we mean by this 200 MA as the actual moving average that is indicated by the long-term moving average. Now, we have the short term, which is 25. We have the mid, which is 55. So over here, we are talking about moving average crossovers. And with the crossovers, we are focusing on the 25 and the 55, which is two moving averages. So when two moving average crosses above and below each other, that is what we term it as the golden cross and the dead cross. Hmm? So using moving averages, we also have golden cross and the dead cross. And what we are saying is this. This is what we are saying. When a 25 crosses above 55, it's indicates as what as uptrend. That is a golden cross. Uptrend. That is what a golden cross. And when 25 crosses below, when it's below, it's indicated as what as a dead cross. That is downtrend. So golden cross means uptrend. Dead cross simply means downtrend, right? So looking at this moving average here, you and I can clearly see that this is the short term, which is green. Then this is the mid term or the long term, which is what? Which is purple, either purple or violet, anyhow you choose to call it. Now, this green moving average crosses below. This is the crossover. So this is where the crossover happened, right? And it is below this mid-term moving average, which is indicated as what? As downtrend. Because you can see all the price are hovering below, right? The prices are hovering below, right? Good. Which is indicated as what? As downtrend. You get it? So what happened? There is a dead cross, and this dead cross gave us what we call the downtrend. Do you get the idea? So maybe we get another moving we get what do we call another price to see. Let's use this. Good. So we also have BTC here, and using BTC we could clearly see that what is happening here. There is what? There is a dead cross as well. There is what? A dead cross. You can see this is it. This is where the crossover happened, and the price is still hovering below, right? And that is when we can see that there is what? There is a downtrend using the moving averages. Do you get it now? So we check predominantly, consistently to realize different prices of what? Of an asset. Different prices of what? Of an asset. Different prices of an asset. Then we get the confidence to know how the trend is moving. Let me know if you get it. Do you get it? Let me know if you get it. Do you get it? Do you get it? Very good. Very good. Very good. Let me know if you get it. Let me know if you get it. Let me know if you get it. Very good. That is awesome. That is good. That is good. All right. Now we can proceed. Now we can do what? We can proceed. Okay. So now, how do we trade using what? Using moving averages. Mind you, all these indicators cannot be used individually. Listen, all these indicators, even though in as much as it's helping us for us to identify market trend, market direction, market momentum. The best way to use most of these indicators is by combining them with other indicators or other ways of analyzing the markets. And we are only discussing moving averages for today. We are only discussing what moving averages for today. So what we are saying is that looking at the moving average, we said we are discussing about the trend and then the crossovers, right? We are not talking about the support and resistance of a moving average, right? So you may see different forms of what of it. Either you may decide either you want to use 25 moving average, 55 moving average. That one is based on your own prescription. So on also in your trading view, so let's go to trading view. So um, all right, so this is trading view. Okay, so let me delete all this. All right, now we have this asset here. Okay, so let's use our indicator. So let's come here. Let's search for, click here. So let's click on what indicator. Oh, sorry. So let's click on what indicators. Now on indicators, good. Click on the search bar. Okay. Click on the what on the search bar. Okay, so we are looking for moving averages. So over here we have different types of what different types of moving averages. So we are only going to talk about the moving average cross, the moving average what cross. Okay, so quickly tap on cross. Now we've added it to your chart. Let's go. So over here on TradingView, you could see wherever there is a crossover, you can see that there is this button that is used to circle tag there where the crossover happened, right? So when you trace back, you could clearly see all areas where crossover happened, right? So over here, you can clearly get the understanding. You can get the understanding that this is a crossover and there is a crossover here. What is this saying? You have different moving averages, the 9 moving average and then the 21 what moving average. So let's look at the two. Which one is the short and long term? You can click on it to do your settings. Okay, so you click on what? Click on the settings and do your settings nicely. Let's do that together. Okay, so over here you can see we have the short moving average as it has been, and then the long what moving average, right? So the short is indicated by red, then the long is indicated by what green, right? Good. Now since we now know, we click on OK. So it simply means whenever we see the red moving average, that is the short term. So over here, what do we see here? It simply means this the short term is above the long term, which is indicated as what? As uptrend, right? And also, let's traces this back. So you could see how price changes over time, right? So let's go forward to, let's look at this as an example. You can clearly see how price reacted here, So this is it. These are the where the crossover happened, right? So the short term is above the what? Above the long term. The short term is above the long term, and that is when we could say that it is what? It is uptrend, right? Good. So over here, what are we seeing? We are seeing that the short term is below the what? The long term. The short term is below the what? The long term, and that is why we could see that it is what? It is downtrend. So if we want to identify the trend, the moving average crossovers help us to be able to identify an easy trend, or to get the trend of the market with ease without without stressing yourself. Have we been able to learn it? Do you get the concept now? Do you get it now? Do you get it now? So the idea of moving average is simple. It's about you, the trader, being able to identify the various crossovers, observing the various crossovers, and then identifying the trend. So we are discussing about how can I see that there is an uptrend, there is a downtrend. So using moving averages, now you can now know, or you can be able to identify a market trend. Do you get the concept? Do you get it? Let me know if you get it. Do you get it? Do you get it? Hmm? Do you get the concept? Do you get it? All right. That is good. Okay. Very good. Good. So someone saying the market is on short now. Yes. Why? Because the trend is on what? It's on downtrend. So basically, what we are saying, concluding before we bring this session to an end, is that sometimes you may see, of course, the moving average is telling you that it is downtrend, but that does not give you 100% guarantee to make one entries or enter. Just take your time to maybe find another indicator, and then also make confirmations if there is an alignment, to which we will talk about it in our next session if God permit tomorrow, right? So if God permit tomorrow, we will look at another indicator. Then we will also look at how to combine maybe two indicators in addition to make confirmation, right? So we are supposed to end here. Let me end here and then give you the permission, the opportunity to ask question. If you have any question to ask, let me give you the opportunity to ask your question. So please ask your question. If you have any question to ask, I have maybe 10 minutes or 5 to 10 minutes. If you have any question, let me give you the opportunity for you to ask your question before we depart. So that is for moving averages this morning. I believe you've been able to understand moving averages. I believe you've been able to understand moving averages. If you have any question, please ask. If you have any question, please ask. Mind you, this session is also recorded, and you can watch it or not on YouTube at your free time. So if you have any question, please ask before I bring the session to an end. If you have any question, please ask. You can raise your hand or write your question in the chat box. So Anna, I don't know. Okay, I guess your hand is not up. Okay, so please, if you have any question, kindly ask. So this is just something you could clearly understand about moving averages, and I hope I did not complicate this session. I hope I did not complicate this session. So it's very simple, right? And glancing through, you could easily understand moving averages using the crossovers to identify market trends. Then also after identify market trends, you may know what to do next, right? Okay, so I'm still waiting for your question if there is any. I'm still waiting for your question if there is any. But then I believe I simplified this session for you, and you have gotten it very clear. So the next indicator is found in the TradingView. Okay, let me see. The next indicator is found in TradingView. Yes, so they are all the same. You see in your exchange, I believe you can see my screen. Your exchange, you could see the crossovers by identifying the various lines. And the same way to in your trading view, you could still see the lines here. But just that they've simplified things by identifying where the crossover happened, right? So you can see the plus, helping you to know the exact location where the plus happened. Do you get the idea? So having this here, you know where exactly the crossover happened and how it's going, right? So that is it. Please, I believe you get it. Success, I believe you get it. Yes, so the next indicator, if you want to use TradingView, you can use it. If you want to use your exchange, you can use it. If you want to use RoyalQ too, you can still use it. You see the crossovers. Wherever you go, you see the what? You see the crossovers. All right. Okay, so guys, um, I believe there is no other question, and I then believe that you've all understood the session because I told myself I wouldn't make this session so difficult by neglecting or ignoring the mathematics involved. A lot of people were panicking when we were doing the calculation, but it was very simple. Even with that, it was simple. So, I believe that is all. The most important thing is for you to understand the moving average crossovers, understand the crossovers, how it works, and then also use them to identify trend, right? So with that, you don't need to, stress yourself for any other things. And as we keep learning, when we come across tomorrow, we shall look at MACD. Tomorrow, if God permits, we shall look at MACD, and then maybe how we can, or either MACD or RSI, we shall look at any of the two, then how we can combine the two together, and then also find entries in the market. All right. So we will end here. If God permits, tomorrow we shall meet again. We will end here. If God permits, tomorrow we shall meet again. I wish you all the best in your trading journey. And the market is still down. So just be cautious of how you trade and don't be greedy. When you see an opportunity, go for it. All right. So, Buddhists, let's go make money. Today is Tuesday and the week is still ongoing. All right. So, looking forward to tomorrow's for combination of indicators. Exactly. So, we shall meet tomorrow if God permits to continue the session. I wish you all the best. And since there is no question, we will end here. See you if I think there will be another session by maybe other leader. One leader will be present to give us another session. So get prepared. That is leader Samsung. So get prepared on team building strategies. Get prepared to join that session if God permits. So let's meet another time tomorrow. Wish you all the best and have a good day. Love you all. Bye.